Alright, in one of my previous videos, I quickly touched on a new dividend ETF I came across, ticker DIVZ, but it's worth an entire video. So today we're going to take a deep dive into this fund, compare it against other top dividend ETFs in the market, like SCHD, and just see where this new dividend ETF ends up amongst the competition. If you guys enjoy, we always appreciate a like, subscribe for more, and let's do this. Okay, so when it comes to ETFs, there's two main ways that I judge them personally: the strategy and the results of their strategy. And of course, you do have other factors like the actual holdings, the expense ratio. All these other things do have an effect on the investment and its quality. But at its core, the strategy and the results are paramount, at least in my opinion. And this is actually why I'm not a big fan of VYM as a dividend ETF. If we come to the strategy, essentially all they do is rank firms by their dividends over the next 12 months. It's very basic, and I just don't like it that much. Now, a fund I do like is SCHD, and they have a very comprehensive strategy. And to be in this ETF, you need 10 years of dividend payments. They look at different fundamental screens like cash flow to debt, return on equity, dividend yield, and things like the dividend growth rate. So I like the strategy of SCHD, and when you compare it against the rest of the market, it has outperformed over the past 1 year, and even in a 5-year time frame, it has still outperformed. Now, when it comes to this new dividend ETF, DIVZ, I also am a huge fan of the strategy. So the first thing you need to know is that they aim to curate a portfolio that is less volatile and has higher dividend yields than the S&P 500. It does this by screening US listed securities for sustainable dividend growth using various quantitative and qualitative indicators. Then, high-quality companies are identified based on high cash flow, stable revenue streams, and capital reinvestment programs. That right there is a strategy I like. And if we compare the performance of DIVZ against the market itself over the past 1 year, again, we have solid outperformance. And if we go ahead and add SCHD into the mix, this is how it stacks up. So as you would expect with two high-quality dividend ETFs, SCHD and DIVZ trade in a pretty similar direction. Although I do have to point out that for most of the year, DIVZ has outperformed SCHD. In fact, right now, DIVZ has slightly outperformed SCHD over the past 1 year. And by the way, this is a total return chart, so this includes the return from the dividend. And speaking of the dividend, VYM, just using them as the base example again, they have a yield right now of 2.95%. SCHD, I think, is sitting just over 3%. Yeah, 3.35%. And DIVZ, at this current moment, is 3.2%. Almost identical with SCHD. So if you're trying to pick between SCHD and DIVB based off of the core of what I look for, I'm going to say that right now it's impossible to make a real differentiated decision. So we're going to have to look at these secondary factors to help us see if one has the edge or not. So these are the top holdings of DIVZ. The number one position is 6.34%, which is a little bit higher than I would like. Everything else is in the 4% range. That's followed by AT&T, United Health Group, Verizon, Genuine Parts Company, and a lot of other high-quality, recognizable blue-chip dividend growth names. I see AbbVie, Lockheed Martin, Ultra Group, JP Morgan Chase, Raytheon. Now, we can also take DIVZ and compare its holdings directly to SCHD. SCHD has about 100 holdings, DIVZ about 30 at the moment. There's a total overlap of 15%. And this right here is the major differences between the two funds right here. Okay, so I like the performance, the strategy, and the holdings of this new high-quality dividend ETF. The only thing I don't like about it so far is the expense ratio. It is pretty high at 0.65%, and that right there might be the deal breaker. That and the fact that this ETF being new only dates back to February of 2021. But if you can look past the young age and the slightly higher than average expense ratio. So far, DIVZ has been accomplishing its goal of giving you less volatility than the S&P 500, a higher dividend yield, and exposure to high-quality dividend growth companies with stable revenue. But let us know in the comments below, what do you think of this new dividend ETF, and would you consider adding it to your portfolio? Hope you guys enjoyed the video. If you did, leave a like, subscribe for more content, and I'll see you guys in the next one.